Alex Karp, the CEO of Palantir, said that he was going to be reducing the workforce of the company by 10% by 2030 while 10xing the revenue. This boasts a very strong, and I mean insanely strong, future guidance and projection for the company. But what does this mean for the stock? Well, that's what we're here to find out. But first, huge announcement. My free masterclass webinar returns this Friday, August 15th, 6 p.m. Eastern, 3 p.m. Pacific. You will learn more in the 1 hour you spend with me at this webinar than you will anywhere else. That's what every student that has attended these webinars in the past has said. Thousands and thousands of attendees in the previous webinars have said the same thing. The link to register for free is below. We are almost full and at capacity. Don't miss out. Link to register is below. Alex Karp, the CEO of Palantir Technologies, has expressed a bold vision for the company's future, aiming for a tenfold increase in revenue while simultaneously reducing the workforce by over 10%. This ambition was voiced in a CNBC interview on August 5th after Palantir released strong Q2 earnings that surpassed Wall Street expectations. Karp characterized this plan as crazy, efficient revolution, stating that the goal is to reach 10 times the current revenue with a workforce of about 3,600 people, down from the current 4,100 employees. While Karp didn't specify the exact time frame for achieving the revenue of 10 times growth in this instance, other reports suggest he has indicated the company can increase its U.S. revenue tenfold within the next 5 years. This could place the time frame for achieving this goal around 2030 or slightly thereafter. Karp's statements come as Palantir's stock has surged with a 139% increase this year, making investors consider his ambitious targets seriously. Analysts are also projecting significant revenue growth for Palantir, with some suggesting a revenue run rate of $24 billion by 2032. However, it's worth noting that even with this potential growth, Palantir's current valuation remains high, leading some analysts to recommend cautious approach for investors. So I've said many times that Palantir is kind of overvalued. Price to sales and price to earnings not good. Their price to earnings forward looking is like 600, which is crazy. So what we want to do is gauge price to sales, and price to sales gauges future growth based on revenue and market cap. The market cap is 441 billion. Had you gotten in when I called it out in my Discord last year and on YouTube, you would have gotten in at $20, which was a lot of growth for the past year, a ton. This is essentially a 6 to 8x return in a year, which is crazy. So we have 441 billion divided by 3.41 on the trailing 12-month revenue. So this gives us a price to sales of 129. Anything over 20 or 30 is insanely high and very bad. So this isn't good. They want to be between 10 and 20 average or below 10 to be stellar. SoFi is still at 6. There's still a 3x return on the table for SoFi. This gauges the potential growth of where a company could go. Now, these numbers are skewed because of the exponential growth, but if we were to sit here and look at the 10x revenue by 2030, that would be 3.44 billion times 10, which would be 34.4 billion. When we divide 441 by 34.41, we get a price to sales of 12, which you can see is pretty good. It's not stellar, but it's really good. Anything between 10 and 15 is really good. So right now, the forward ratio on price to sales for Palantir is 123 times, which is about 3 times too high. Based on the 10x growth, the price to sales will be 12.8, which is stellar, which means it'll be trading at what it's worth if the price was to remain the same. However, if we were to 3x this, it would be 38, which is a little high. So we might get 3x as we go through based on a general analysis, meaning the stock price would likely 2.5 to 3x or more based on the current trend, probably more, but even a very conservative 3x forward-looking ratio price to sales of 30 to 40, which some companies do have currently, and a lot really do, because the forward-looking ratio on price to sales is usually generally 20 to 30. So that gives 3x on Palantir. So Palantir right now is trading at 186, and you times that by 3. Palantir will very realistically be somewhere in the 500 to 700 range by 2030. So there is a 3 to 4x return. So if you look at 300%, and divide that by 4 more years to go, that's 75% per year. So there's a lot of growth on the table. And even if we were to be very modest and use a 3 times forward-looking ratio on price to sales, that would still give you pretty much that number. And right now, Palantir is trading much higher, and a lot of stocks are trading much higher than that, but it really depends on the sector and what's going on. If we look at price to earnings, it's 607. Now, 607 divided by the average, which is 35 to 40 on a decent company, it's 17 times higher than what it should be. But most times companies will trade 5 to 10 or even 20 forward-looking ratio. So at a 10 times revenue increase and a 10% workforce decrease in the efficiency and the government contracts that they have that they're expanding to and the way they're growing, Palantir almost inevitably has a 3 to 5x return in the next 3 to 5 years. So it makes it an absolute no-brainer to sell put options at 160, 150 going a month out, buy leap options, buy shares. However, there's risks with every stock and with every sector. And whatever you're doing in the market, there's just risks everywhere. So you want to maintain no more than 10% of your portfolio in any one position. This is what I teach my students. It's part of my 33-10 rule, my DFib, and of course my AVP and my DFib oscillator on the stochastics. I have a very accurate set of tools that I use that I teach in Discord. If any of this is confusing you, or maybe you just don't even know where to begin, I'm driven every single day to help students just like you grow your portfolio. You can join my Discord and get started with the link in the information box below. So I told everyone not to buy PayPal, and it tanked. Right there on the screen, you can see it tanked. Many YouTubers pumped it. I told my students, you can see the trade on the screen, to buy XYZ. My students printed on XYZ. Then I called a trade right there on Meta. You can also see the graph on Meta most recently where my students made 10, 20, 30, 40, even $60,000. This is what I do. So if you want to know what's really going on in the stock market and grow your portfolio, you can join Discord at any time. The link's in the information box below. So Palantir is definitely looking very strong going forward. There's a lot of good news on this stock, and it just continues to grow. At this point in time, it's one of those situations where it's go for broke. The stock very well at some point could nosedive back to 130, 140 because these are where the supports are, but it's broken every rule that I've ever seen a stock break. It's basically the Nvidia of 2020 or the Tesla of 2020. So right now it's very difficult to gauge when this stock will pull back and if it will and where it will go. We know that there's a lot of support at 126, a lot at 150, and there's some at 170. It's honestly my very strong educated guess based on technicals, financials, price action, momentum, sentiment, that outside of a black swan event or outside of a complete market meltdown or a bankruptcy issue or a lawsuit or something major with Palantir, the stock is very unlikely to go below 150 at all, ever going forward. Like it could go to 125, 130, but I mean, really 130 to 150 would be the floor at this point. If that even happened, we can't even sit here and say that if there's geopolitical issues, the stock would go down, because this stock soars on geopolitical issues because it works with the government. Palantir has got half of its contracts or more in government. So whether there's geopolitical issues or not, this stock is going to go up either way because they have a nice balance. They are poised to be very strong. If you look at the past, when the market crash happened in March of 2025, a few months ago, Palantir was very strong. But when the market's doing well and geopolitical issues are down, it's also equally as strong, if not stronger. So at this point in time, I would say that it's, in my opinion, I would be selling put options at 170 and some at 160 going a month out. And I would just be trying to get in, add some leap options over time, just add to your position. This is a stock that very well could break $200 or even $220 before the end of the year. It's hard to say for sure. I think that's pushing it, but it could. There's still a lot of growth on the table, especially next year and the year after. This is a stock that you want exposure to. So you want to definitely be safe, and you want to definitely look at this stock. If you already have shares, you already have leap options, you definitely want to keep holding, because remember, time plus good stocks equals money, equals profits and success. We can see they've crushed earnings, every single earnings over the past 4 straight quarters. They continue to do so. price to earnings is quite high, but they are crushing earnings and growing at a very strong and, to be quite honest, rapid exponential growth. And the shares float based on market cap and based on the stock price and their growth is not that high. And overall, I can quite easily seeing this a 1 trillion market cap in the next 2 to 3 years. So there's at least a 2 to 3x in my opinion by 2028, maybe sooner, but 2030 is likely, very, very likely that will be well over a trillion, maybe even 2 trillion by 2030, 2035. But it's really going to depend. Right now, 1 trillion is on the horizon for the next 2 to 3 years. So either way, 2 to 3x return for Palantir is very, very probable and likely. And like I said, this is something you want to make sure you have some exposure to because of its exponential growth and likelihood to continue doing such. Don't forget, guys, my free masterclass webinar returns this Friday, August 15th, 6 p.m. Eastern, 3 p.m. Pacific. Very limited spots. Can't stress that enough. We don't have much left. Once we get to a certain amount, we have to cut it off. The link to register for free is below. I have a huge announcement during this webinar, and I'll be taking your questions and answers and showing you how to trade and get into this market and understand what you're doing wrong. That's what I'll be showing you how to do this Friday. If you also want to just join Discord right away, the link to join and get started is below. I look forward to helping you grow your portfolio, and I will see you Friday and on the next upload. Take care of yourselves, fam. One love.